Let's just switch gears and connect with the management of Phillips Carbon Black. It just released its third quarter numbers and it's been a strong show. So we have with us none other than the chairman himself, Mr. Sanjiv Goenka. Mr. Goenka, thanks so much for joining in on ET. Now, it's always a pleasure chatting up with you. Congratulations, great set of numbers. So first up, help us understand, what propelled this massive uptake in the profitability and even something that has been led by the margins, because the EBITDA margins have expanded a nice more than 300 basis points on a year-on-year basis.
I think it's a reflection of multiple factors. The biggest contributor to this improvement in margins is the shift in product mix. You would have heard me in the past quarters talking about our focus on value-added blacks and specialty blacks. And this is the first quarter we are seeing the reflection of this better mix or better share of value-added and specialty blacks in the portfolio. Combined with it, we've done a lot of internal improvements. So in terms of costs, in terms of logistics, in terms of customer interactions, in terms of just-in-time delays, in terms of quality. So everything coming together, this is the best quarter that the company has ever had. And we feel very satisfied with what we've been able to achieve so far.
Mr. Goenka, you mentioned value-added products that has helped propel the margin. So could you explain to us what currently the share of value-added products is to your revenue? And I'm sure you have plans to focus more on those because they are higher margin products. So where do you want it to, how much do you want it to contribute going forward?
We expect our value-added and specialty segment to double in volume from where it is today over the next 2.5 years. That is the target that we've set ourselves. With that end in sight, we have set up a new research and development facility in Palej, which is in Gujarat. It's an exclusive facility with a very strong team of engineers, national and international. We are also now proposing to set up a facility for this in Europe. We haven't frozen the location, but we've sort of worked on shortlisting a couple of countries, and hopefully in the next 2 quarters we should be able to start work on that as well.
So in total, what sort of capacity are you looking to bring on board with these plants that you mentioned, one in Gujarat, one abroad? What sort of capacity you are looking to bring on board in your value-added segment?
These are not plants, these are R&D centers. So they will actually develop products which will be produced at our various factories that we have.
Right. I want to just focus in a little more on the profitability front. We did have a significant volatility in crude prices. I mean, just in October and between October and December, we saw crude moving from 86 to even sub $50 per barrel, very briefly. So how did you see that volatility in crude, and of course on account of that, the crude derivatives impact your own costs during the quarter?
This is a risk that we always run. So our approach is that we don't really stock up our raw materials for the future. We really have a just-in-time policy. So all the stock that we have is on the high seas. So we don't really believe in actually pre-booking or playing the stocks, playing the crude prices. No speculation. So what we need, the minimum stock that we need from a lead period perspective is what we have.
Okay, so Mr. Goenka, that means it would be safe to say that you would as well be, your cost rather would very much depend on how spot prices move too, am I right?
Yeah, exactly. If crude goes up, then our costs go up. If it goes down, then our costs go down. But we do have a system where the crude prices are passed on to our tire consumers. The positive, I mean, if it goes down, they get the benefit. If it goes up, they take the rap.
Okay, fair enough. So How have realizations shaped up in Q3, and especially after you've been adding a lot of these value-added products, and as you will as well going forward, how will you see realizations move going forward too?
Realizations, I think, will stabilize at this level, but we hope that we'll be able to constantly improve our product mix and have a higher focus on value-added blacks and specialty blacks.
The tire sector, which is of course naturally one of your key customers, one of your key clients, that has been ailing for the last, I think, 2 or 3 quarters now. Has there been any change in demand from some of your key clients? If you could talk about that.
Well, I think so far it's been good for us, and our share with each of our tire clients has actually been going up. And if you talk of our share with MRF, that's been steadily going up, and we are now getting into long-term relationships with tire customers. So our share with CEAT was already very high. Our share with Apollo has gone up. Our share with JK has gone up. So all the tire majors in India, our share has actually gone up compared to what we were in the past.
All right. Okay, Mr. Goenka, we leave it at that. Thanks so much for joining in and helping us understand what transpired for Phillips Carbon in the third quarter.